Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the Don front and center once again. He's got the timeline here for the tariffs, March the 4th for Mexico, Canada, and an extra 10% for China just for kicks. Now, this has seen a really big, strong dollar move, right? Dollar going up. Now, this is against, what we were seeing earlier in the week with the US consumer confidence numbers, much weaker than expected. The data that we saw yesterday, durable goods, okay, a big rebound, but GDP estimates sort of as expected, and the initial jobless claims was higher, right? So that's like a positive. You've got a negative and everything else in between. So we had a bit of a bit of a weak dollar sort of feed into the week. We are now starting to see a little bit of a spin around, right? So the US yields are finally going down, right? So what does that do for us? Well, that's like a weaker dollar, but we're not seeing that across the major pairs, right? So this is a bit more like old school, where the markets sort of acted independently. That's the sort of way it was. But look at what's happening here. You're seeing a sort of strong dollar move to the top side. When you see a move like that, there's a good reason for it because the market wasn't positioned for this move. Okay. And that's why it's exaggerated. If anything, you're looking across the board here at all of these instruments. They are massively overdone, right? Euro, sterling, Aussie, Kiwi, massively oversold. And all the dollar pairs massively, well, not massively overbought. Dollar Swiss has been pretty moderate. Dollar yen's going down, but dollar CAD definitely is. So, why am I showing you this? Because this is going to be very important as we come through into today's releases, right? So, let me just change the screen back. Okay, now let's just have a look here at what's going on. Now in the live trade hub. Okay, so what to do, what to trade, and when. Now this is the situation. We do have like the euro, sterling, Kiwi, and Aussie are all going down, but short-term momentum they're massively oversold. So it's a bit of a hard one because they're so stretched that you can see a massive ricochet, right? They are all geared up, ready to go up. Okay, so that's got to be sort of something you're going to look for. Obviously, the dollar index and the dollar Swiss both going up, but they are also sort of a little bit stretched there as well. Now, what I can see, this is you got to look at the data here, right? And just let's focus on these four pairs here, right? They're all going down, massively, massively overdone. This sets us up for a good opportunity on today's PCE price index numbers because you know what? We've got this sort of geopolitical stuff driving the dollar higher. But if we get the PCE price index here, month on month, zero point 0.3, the range 0.2 to zero point 0.4, and the year on year 2.6, with the range 2.5 to 2.8. Now, if we get like a weaker dollar, weaker numbers here, right? What you're going to see, there's a big chance because these things are so stretched that there's a buying opportunity, euro, sterling, Aussie, Kiwi, right? In fact, if we get strong numbers, I wouldn't even say go long dollars because everything is absolutely stretched because of this geopolitical event. So I'm taking a strong dollar off the table. If it comes out strong, I couldn't say to you, hand on my heart, and say, listen, the dollar's going to keep going up here because it's already moved, right, on something else. Will it keep going? I don't think so. It's too stretched. So the big trade here is weaker numbers, and ideally, okay, so what we're looking for is a number below or month on month, year on year. Well, actually, that should be year on year. I'll fix that up. Year on year, less than 2.5. You're going to see a really good opportunity to jump into a trade here because these, let me just clear that sheet. These instruments here have been absolutely stretched on the geopolitical event. Okay, they are going down, right? So this isn't like a long-term trade by any stretch, but what we are going to see is an opportunity to get into a trade here on weaker US numbers. And this is what I'm looking at, right? Where Euro's down around 104. I could easily see it back up towards 104.70, 80. Sterling back up towards, 126 and a half. Aussie back towards 63. And Kiwi back towards 56.90. It's like a rubber band that's been stretched. All we need is the rubber band to break or let go, And that's where weak PCE price index numbers will give us the opportunity there, right? So um, and don't forget, we don't know what the outcome is here. These other countries, Mexico, China, Canada, I mean, everyone's going to come back and retaliate with tariffs, and that's going to offset things. Look at this opportunity as a very short term opportunity, right? It won't take much. If we get weaker data here, it won't take long for these things to correct. They should correct within a couple of hours. You may be holding these positions for 2, 3, 4 hours, and that's it, right? Bag it and tag it, right? What I'm saying is you get into the trade, take the cash when the price action stalls, pull out and wait for the next leg of the geopolitical event, right? So that's where we are. Now, just on that, just give you a look at prime time analysis. I mean, we've already sort of gone through that. You can see everything lined up quite nicely. It's just a shame that this geopolitical event has come in because it upsets the rhythm of the markets, and it's sort of, you see discombobulation. Now, next week's live sessions, I am going to be running a 10-week challenge, right? I've been waiting for all this development work to be finished. We're basically there. Hopefully, we've got new liquidity coming in for our funding, and that's when I'm going to kick this off, right? So 10-week challenge. What that is I'm going to be looking to make 10K a week for 10 weeks, right? It's to try and keep you focused, and it's going to allow me to train you to do a lot of different things while I'm doing this. And one of them is setting goals that you might find a little bit of a stretch, but that's what keeps you focused, right? And then I'll be running through over those 10 weeks about how to sort of break down the challenge into smaller components, right? It may seem overwhelming to try and make 100 grand in 10 weeks. Absolutely not. We get a couple of good weeks of trading in the markets, you're probably up 30 or 40, 50 grand anyway. Besides that, we've got the Swiss CPI, okay, the inflation rate, I should say. So we've got a few things coming up, and I'll be running you through the 10-week challenge. I've reset the whole portfolio. I'm going to be posting the pending orders, active trades, closed trades, and I'll keep you up to speed on that, right? It's going to be sort of exciting for me. I can't wait to rip in and show you guys how to pull money out of the market. Just keep tapping it into the account. So plenty to look forward to. Just keep an eye on the PCE price index numbers today, right? And actually have a look at the market as we lead into this, right? As I said, technically, these instruments are massively oversold. So even though the direction is down, I see a short-term blip to the top side. All right, that's it from me, guys. All the best. Good luck. Cheerio.